Hello and welcome back to Explain the Charts, your go-to channel for no-nonsense technical analysis. Today is September 29th, 2025, and we are looking at a stock that has been on an absolutely incredible tear, Intel Corporation, ticker Intel. After a long period of underperformance, Intel has rocketed higher in the last 2 weeks, and today we're going to break down the news driving this move and what the charts are telling us about where it could go next. First, let's cover the mountain of news that has completely changed the sentiment around this stock. Intel has been aggressively restructuring, with significant cost-cutting measures and a renewed focus on its foundry strategy. A key part of this was the recent sale of a majority stake in its Altera business to Silver Lake for $3.3 billion, which helped Intel lower its expense forecast for the year. This demonstrates a commitment to financial discipline that investors have been desperate to see. Beyond its own restructuring, Intel is benefiting from a strengthening market. Rival chipmaker Micron recently raised its guidance for both PCs and traditional servers, two of Intel's core markets, citing the Windows 10 end-of-life in October and the rise of AI PCs as major tailwinds. The biggest catalysts, however, have been the huge influx of investment and potential partnerships. The company has already secured investments from the U.S. government, SoftBank, and even rival Nvidia, which reportedly took a 4% stake. But the bombshell report that truly lit a fire under the stock was the news that Intel has approached Apple to explore a potential investment. These discussions are preliminary, but the mere possibility of a deeper collaboration with a giant like Apple has sent the stock into overdrive. Now, let's turn to the daily chart and see how this news has translated into price action. For over a year, from the massive gap down in August 2024 until early September 2025, Intel was trapped in a range, mostly between $19 and $25. The price action was bearish, with the stock unable to reclaim the major gap down level near $29. That all changed in mid-September. We can see a massive volume surge beginning around September 17th, which marks the start of this explosive breakout. The stock didn't just break resistance. It gapped straight over it, jumping from a close of $24.90 on the 17th to an open of $31.78 on the 18th. This move, fueled by the investment news, completely filled the year-old gap and signaled a powerful reversal in trend. Let's zoom in on this recent move to get a better look at the key moments. Here we can see the price action just from the beginning of September. Notice the massive green candles on September 18th, 25th, and 26th, each accompanied by colossal volume. This indicates intense institutional buying pressure and strong conviction behind the move. The surge on September 24th and 25th, taking the stock from around $29 to over $34, lines up perfectly with the reports of Intel seeking an investment from Apple. The stock peaked on September 26th at $36.30, a level that is now our primary short-term resistance. Since hitting that peak, the price has started to pull back and consolidate, which is healthy and expected after such a parabolic run. The key now is to identify where it might find support. Switching over to the 1-hour chart, we can analyze this consolidation more closely. After the sharp ascent to $36.30, we see the price forming what could be a bullish flag or pennant pattern. This is a classic continuation pattern, suggesting that after a brief pause, the price may be preparing for another leg up. Immediate support on this time frame can be found around the $34.50 level, which was the low from September 26th. A more significant support zone is the top of the previous breakout candle, right around $34. For this bullish pattern to remain valid, we want to see the price hold above these levels. A decisive break above the flag's upper trend line, and especially above the $36.30 high, would be a strong buy signal for short-term traders. For our intraday traders, the 15-minute chart shows the recent chop within this consolidation range. You can see the battles being fought between buyers and sellers around the key psychological level of $35.50. Watching for volume spikes on breaks of small intraday highs or lows can provide clues to the market's immediate intention. However, the bigger picture remains dictated by the higher time frames. Now let's switch back to the daily chart to put it all together and discuss our outlook. So, what is the verdict on Intel? Let's outline the bullish and bearish cases. The bullish case is compelling. The fundamental narrative has completely flipped, driven by strong market demand, internal restructuring, and a flood of major investments. Technically, the stock has shattered a year-long downtrend and broken through major resistance at $25 and $29 with overwhelming force. The path of least resistance now appears to be higher. A sustained break above the recent high of $36.30 would bring the July 2024 peak of $37.16 into focus. If that level is cleared, there is very little historical resistance for quite a way up. I would put the probability of this continuation at around 70%, especially if any positive news on the Apple front is confirmed. The bearish case centers on the fact that the stock is extremely overbought in the short term. A run from $24 to $36 in just over a week is unsustainable, and a deeper pullback is very possible. A failure to break the $36 to $37 resistance area could trigger profit-taking, potentially sending the price back down to test support. The first major support to watch is the top of the breakout gap, around $31.78. Below that, the old resistance at $29 is a critical level to hold. A break back below $29 would suggest this was a failed breakout, though I see this as a low probability, perhaps 20%, unless we get some seriously negative news. So, to recap the critical levels to watch. Resistance is at $36.30, and then the major zone around $37.16. Support lies at $34.50, then more significantly at $31.78, and the crucial line in the sand is at $29. Keep an eye on volume. We want to see it increase on upward moves and decrease during pullbacks. Also, be aware of broader market risks, such as the new tariffs set to be announced on October 1st, which could cause volatility. That's our analysis of Intel. The situation is dynamic, but the bulls are clearly in control for the first time in a very long time. Thanks for watching Explain the Charts, and be sure to subscribe for more in-depth analysis.